The Institute for Financial Literacy is a collaboration between Money Sense, the National Financial Education Program, and Singapore Polytechnic Enterprise. As the outreach arm of Money Sense, we conduct free and unbiased financial education programs for the public. Financial resilience during COVID-19. In this video, we will learn how to build financial resilience by properly managing your money and by protecting you and your family. Managing your money. To begin, it is important to take stock of your current financial position. You can start by making a list of your income and expenses to determine if your net cash flow is positive or negative. For example, Alvin has a gross salary of $3,750. After deducting his 20% CPF contribution, he is left with $3,000. To see if his net cash flow is positive or negative, he starts by making a list of his expenses, which includes food, $800, transport, $600, household and groceries, $500, utilities, $300, entertainment, $600, and mortgage repayment cash portion, $500. His expenses add up to $3,300. This means Alvin has a net negative cash flow position of $300. If net cash flow is negative or will become negative, prepare a budget for crisis to manage your limited resources. A crisis budget aims to eliminate non-essential spending and focuses on how much you will need for essentials. You may ask how to budget during a crisis. Well, here are the steps that you can take. First, when you receive your income and other cash inflows, save at least 10% if you can. The remainder can then be used for must-pay bills and necessities such as utilities and groceries. Alvin looks at his expenses, identifies his needs and wants, and takes action to reduce his spending. He categorizes his spending into essentials and non-essentials and realizes that he needs to reduce his spending on entertainment and transport. He also aims to eat in more often to lower his food expenses. A crisis budget template is available on the IFL website for your use. After you have prepared a crisis budget, perform a debt review. Pay off your credit card debt and consider converting your outstanding credit card balances to lower interest rate loans if you are unable to pay. Be sure to check with your card issuers for the necessary steps. If you do not pay your credit card outstanding balance of say $3,000, with a credit card interest of 24% per year, it will double to approximately $6,000 in just 3 years. Negotiate with creditors where necessary and tap on the various assistance schemes available. During COVID-19, visit supportgowhere.gov.sg to see which assistance schemes you are eligible for. Do not borrow to invest so as to avoid taking on additional debt. If cash flow is negative during COVID-19, you may want to defer your mortgage and insurance payments. Check with your financial institutions for details and be aware of the implications of deferment. For a mortgage with $200,000 outstanding principal and a remaining tenure of 20 years, and assuming a 2% interest rate, the extra interest cost over the remaining tenure will be about $1,300 for a principal-only deferment period for 9 months, and $2,930 if the tenure is also extended by 9 months, and $1,920 for a principal and interest deferment period for 9 months, and $3,570 if the tenure is also extended by 9 months. Protecting you and your family. In this topic, we will explore a few ways to protect you and your family during a crisis. To seek assistance on employment and career advice, there are a few job portals suitable for Singaporeans. Workforce Singapore WSG and Employment and Employability Institute E2I, for example, provide complimentary coaching services and career advice. Furthermore, consider upgrading your skills through Skills Future to better your employment options. After you have looked at protecting your job and employability, then take stock of your insurance policies. You may be having difficulty paying the premiums, and you might be thinking of surrendering your policies. Before you do so, remember that it is important to stay insured so that you and your family are protected. There are implications when surrendering insurance policies. Mary is considering terminating her 2 life insurance policies as she's having cash flow problems. Her insurance agent shares these implications with her. She should understand that if she decides to terminate her insurance plans and then wants to reinstate them later, she may not enjoy the same coverage due to a change in her age and if her health deteriorates. She needs to be aware that insurance plans with saving or investment will incur a loss if she terminates or surrenders them before maturity. Her agent shows her the potential surrender value in her policies. Mary brought her policies with her. If she surrenders her policies, she will lose the protection she bought in the first place. Her agent also pointed out that if she wants to terminate her policies due to immediate cash flow problems, she can consider other options, such as policy loans to free up emergency cash or premium holidays. If she decides to take up the premium holiday, she has to ensure that there is sufficient cash value, otherwise the policies will lapse. During COVID-19, she can also consider deferring the insurance premiums. Mary decides that she will not surrender her policies and continues to talk to her agent on the options available. Always check with your financial advisors or insurers on the implications of different options before taking action. Beware of scams. If the deal sounds too good to be true, it probably is. So don't panic, don't believe, and don't give. Tony receives a call from someone claiming to be from his bank, asking him to confirm his financial details. He gives them his bank account number and even the one-time password OTP to access his account. After a few minutes, he was shocked to find his bank account has been emptied and he has lost thousands of dollars. Tony has been scammed. The next time you receive a call from anyone claiming to be government officials or from your banks, always remember to confirm with the relevant parties directly. Never reveal your passwords and bank account details to anyone online or over the phone. Don't be a victim of scams. Always ask, check, and confirm to protect yourself. These are unprecedented times, and you may be influenced to follow the crowd and panic buy. Be wary of fake news and rumors. Get your information from reliable sources such as gov.sg's WhatsApp or mainstream news media and government websites such as the Ministry of Health. To summarize, prepare a crisis budget and be prepared to reduce your non-essential expenses. Perform a debt review to reduce your debt burden. And review your insurance to ensure that there is adequate protection for you and your family. Be safe, be healthy, and be resilient.